Hey, what's up guys? Welcome back to the channel. Hope you all have had a great weekend. In today's video, I'm going to be going over my top 7 swing trading tips and strategies that have helped me towards the path of consistent profitability and accelerating my trading account growth. These are compiled from mistakes and experiences I went through in my swing trading journey and are actually some very important techniques that I do think every beginner should understand and apply. I hope I can provide you some value from this and aid you in the journey to growth. And without further ado, let's get into the video. Tip number 1. Always focus on the longer term time frame. Now, specifically in swing trading, you are always either holding a position overnight for multiple days or for multiple weeks, and in some cases even for multiple months. And it's important to realize that the longer term time frame is always the most well-respected time frame. So specifically, I'm talking about time frames like the daily chart or the weekly chart. These are charts that are typically the most well-respected by banks, by institutions, by even trading algorithms, because at the end of the day, the price action is compiled over a longer time frame, and the longer time frame at the end of the day is more important to people because the stock market is essentially a tool to invest in your favorite companies. Short-term trading never was really the goal whenever the stock market was created. It was long-term investing in wealth creation, and that's one of the reasons why the longer-term time frame is typically more well-respected. And it's important to realize that whenever you're swing trading, even if you're looking for maybe an overnight swing for a couple of days or even just a couple of weeks, like 5 to 7 days, it's still very important to look at the daily chart to identify your support and resistance levels, and also your MACD and your moving averages. Those tend to work best on the longer term time frame. In the short term, there's a lot of noise with obviously a lot of retail traders in the market that have come on board over the past year or so, but also a lot of algorithms, a lot of stop loss rate mechanisms, and a lot of bots tend to mess up price action in the short term. And as a result, a lot of the indicators and a lot of the main support and resistance levels, the psychological levels, tend to get a little bit more disrespected on the short term. Now, obviously, you can shift to the short term like the 1 hour chart for timing your entries correctly, but I always recommend for swing traders, especially new swing traders, to always start off with the daily chart. So map out your support and resistance levels on the daily chart and also give a look at the weekly chart sometimes. That can also give you an idea of what the overall long-term trend is looking like. Because at the end of the day, as a swing trader, you always want to follow the trend until the trend stops, right? If we're in a bull run, you always want to go for bullish trades. If we're in a bear market, in the short term or in the long term, you always want to identify that ahead of time before you actually take the trade. Tip number 2. Always understand the state of the general market before you enter a swing trade. Now, this is also a very important thing that I think a lot of beginner traders tend to overlook. They tend to get caught up in a lot of the penny stocks, obviously, that we love trading, and the state of those stocks, and individually isolating them whenever they're deciding to enter or buy a stock. And the important thing to realize is that the market tends to move a lot more stocks than you really think. Even the S&P 500 or the QQQ, which is what I have up here, tend to move a lot of the penny stock market up and down as well, as we've seen over the past month or so, right? The SPAC market, the EV market, the solar market, even the energy market, and obviously the penny stock market took a big dump as soon as the SPY and the QQQ, as you can see, took a big dump as well. So this is the weekly time frame. You can see this is the technology heavy NASDAQ ETF. This one kind of broke down from these highs and wasn't really able to make a higher high, and as a result, the stock market, the penny stocks started selling off as well, and it caught a lot of people off guard. You want to look at what the chart is doing on the general market before you enter swing trades, especially heavy positions. I tend to swing maybe mostly around 6 to 7 stocks at any given point in time during the week in my portfolio, and I realized that the market is getting really weak and the market's getting extremely overextended, and as a result, it's important to realize when to trim out your swing positions or when to lock in those profits. I know we talk about maximizing your profits from a swing trade and as a result not selling early, but it's also important to realize that whenever the market is signaling a potential selling signal, to always take that as caution and potentially scale out and lock some profits and potentially raise some cash to maybe buy on the next dip. You can see that the RSI had this negative divergence going on the weekly time frame, and like I've said, the long-term time frame is the most important time frame. And as you can see, a lot of the institutions started selling up here and the market tanked. You have to stick to the stocks that are holding up the best in a downtrending market. The penny stocks, the biotechs, the SPACs, the EV plays that are holding on the best when the market tanks tend to perform the best when the market recovers. And this is just a very, very general psychological thing. If you are seeing a stock that is not going down as much as the general market, let's say the general market tanked 5% in the week and the stock's only down like a 1.5% or 2%, that means that that stock has relative strength and there's a lot of buyers that are holding up the price. And as a result, once the market recovers and the institutions are on the same side as the retail market, then the stock can skyrocket very fast. And that's also a very good opportunity and a strategy that I've applied many times in the past to both biotech plays and also SPACs and EVs. Tip number 3, make sure to always stay updated with what your company is doing and what the company has planned for the next 1 to 2 months. Now, the beauty of swing trading is that you're combining technical analysis with a lot of fundamental analysis as well. And fundamental analysis essentially consists of keeping up to date with what the company has in store, fundamentally speaking, from the business aspect for the next 1 to 2 months. What catalysts does the company have for the upcoming time frame, right, and the upcoming quarter? And one of the very important things to realize is whenever you're swinging a ticker for multiple weeks or multiple days, you want to stay updated with what the company is posting about its orders or its revenue streams or its clinical trials. For example, here I have ticker symbol CRDF, which is a swing I'm actually considering adding next week. I think this one has a lot of upside, but I'm going to talk about it in maybe a later video. But essentially, this is a biotech company, an oncology company that is presenting data in early April. And the best way, in my opinion, to do research and stay up to date with the company is to look at news and press releases. Now, this is the Webull app, which is obviously a very fantastically well-built app. And they have a news section on the right side, as you can see right here, with all the updated press releases. And you want to make sure that this company, is updating its investors consistently. So look for conferences, earnings calls, any investor relation events that are going on, or any articles that have been written by third-party sources, and try to understand what the sentiment of the company is in the general market. Another fantastic way of doing research is through Yahoo Finance. There's a lot of free tools online that I just think are fantastic in the modern day and age. Yahoo Finance is one of them. And on Yahoo Finance, you can straight up just click and type in the ticker symbol that you want to look at, and it'll give you all the information you really need to do your fundamental research on the company and stay up to date with what the company has to offer. As you can see, if you scroll down, you can see all the latest press releases, what the company has offered through PR Newswire, or what even third-party companies have to offer. And all this information is available for free. You just have to put in the effort and make sure you stay up to date so that you're not caught with your pants down. Another very important thing to do is to check the company's website. Whatever company you're buying stock of, make sure they have a website. Make sure they're keeping their investors updated through their website. And one of the very important things to keep a check on is the SEC filings of the company. So make sure to go to the investor relations page of the company, go to SEC filings, and make sure to look through their 8K and 6K SEC filings. These are essentially filings where the company is updating its investors of any major events that the company might be doing in the medium term. This is something that the officials of the company and the executive management are forced to provide to their shareholders. And the more you do your research on this, the better you will be at the end of the day. Tip number 4. Make sure to always have a timeline for your swing trade. Now, swing trade is obviously very different from day trading in the fact that you're holding these stocks overnight and you're potentially exposing yourself to some overnight risk where the market might be more volatile. And as a result, your swing trade will also generally be more volatile. And as a result, I think it's very important to keep in mind to have a potential sell date for your specific stock. So you want to have an idea of how long you're expecting to hold this stock. Even if it doesn't hit your stop loss or it doesn't hit your price targets, you want to make sure you have a timeline. A timeline could be consisted of earnings reports, SEC filings, or even conferences. They could also be stockholder meetings, merger dates, press releases, or even data release dates. A lot of these biotech companies tend to release their data information all over their website. They provide timelines as to whenever they expect to release data, or they expect to start a new study, or whenever they expect to file for a new drug application, also called an NDA or a BLA application. These applications are very important to keep in mind, especially for biotech companies. For other companies such as Chinese tickers, for companies in the software space, companies in the energy space, oil space, these companies will often give shareholders a notice ahead of time of any stockholder meetings that are coming up, earnings dates that are coming up, or potential earnings conferences that the company might be partaking in. And these can act as really good catalysts, not only for a day trade, but also a catalyst as a swing trade. Typically what happens is these stocks tend to run up into these catalysts. They might run up 5 days ahead of time. They might run up a couple of weeks ahead of time. You don't really know. And that's why it's important to have a timeline whenever you buy a stock. Tip number 5, look for penny stocks and small cap companies with high insider ownership and a small to medium float size. Now, one of the tools I love using intraday every single day for my research and studying is something called finviz.com. This is a free tool online that really can help you really step your game up, especially for swing trading, because you do need to do a lot of research to the next level. So let's just type in the ticker CRDF, which is a swing I'm thinking of adding in the very near future, and look for this number right here. Typically, I want to look for insider ownership above 1%, above 2%, above 10%, and above 20%. As you can see, this one has insider ownership sitting above 1%. It means that insiders, officials like the CEO, the chief financial officer, the chief operating officer, they have some stake in the company in the form of common stock. And at the end of the day, they have a big bet that they're also making on their own company. This is going to essentially provide you a higher chance that the insiders of the company are going to try their best to create some sort of shareholder value from the stock price. Another important number to pay attention to is the shares float. This is the amount of shares that are available to trade for the public, and I typically look for shares float of under 100 mil. This tends to provide the best reward potential. This means that the stock price is going to be a lot easier to move to the upside and also to the downside. And generally speaking, a lot of companies that have share floats under 100 mils don't have a lot of history of diluting shareholders through offerings and primary and secondary offerings. These offerings tend to dilute shareholders, and at the end of the day, they tend to create a lot of negativity around the company, and they suppress the share price. And as a result, they tend to move quicker as well, which generally speaking, for me, has provided the best of the best returns. Tip number 6, if you're trading penny stocks with under $500 million market caps, make sure you know how much cash the company has on hand from their latest 10Q or 10K SEC filings or from Yahoo Finance. You need to make sure that you know how much the liquidity company has so that they're not going to end up diluting shareholders through an offering. You want to make sure that the company can cover at least 4 to 5 quarters of expenses with their current cash on hand. Otherwise, an offering could be coming in the near future in the form of dilution that could, at the end of the day, invalidate your trade and suppress the share price. The best way to do this for me personally, that's worked really well over the past year or so, has been looking at the current ratio number on finviz.com. So typing in your ticker, you can see this number right here is going to tell you how much liquidity the company has from debt compared to the amount of cash. So this tells me that the company has over 21x amount of cash when compared to the amount of debt they have in the short term. And this is a very good number. The higher this number is, the better it is. I typically look for numbers that are over $2. A $2 or above current ratio means that the company has a lot of liquidity and there's going to be very low risk that the company does an offering in the near future. And finally, tip number 7, make sure to incorporate at least one momentum indicator on your chart to provide you more high probability entry points. You need to just pick one indicator and stick to it. You can either use the MACD or the stochastic oscillator indicator. These indicators tend to work best in my opinion. I personally love using the MACD, and I think it's been a very beneficial overall indicator that is something that's very well respected in the community, and as a result, it just works really well. The best way to use the MACD is for looking for buy signals on the downside and looking for crossovers to the upside above the zero line. The zero line is essentially the line that separates the red bars from the green bars. And the higher the green bars are, the more the momentum is towards the upside. The longer the red bars are, the more the momentum is to the downside. You want to always look for the crossover between these two lines and buy when that happens. You also want to generally look for something called divergence, which is when the MACD is making a higher low when compared to the price action. As you can see in this case, the price action is making a lower low, but the MACD at the same time is making a higher low. What this tells me is that the price action is looking to break out very soon because the bearish trend is coming to an end and the bulls are starting to take control of the price action. And there could be a breakout coming anytime soon. But anyways, guys, that's all I really have for you today in this video. Make sure to drop a thumbs up. I'm also going to be making a video on SEC filings in the very near future, so make sure to have that notification bell on to stay updated on when I post a new video. But anyways, guys, I hope you guys learned something useful from this video. Make sure to drop a thumbs up, and I'll catch you guys later.